People often wonder, what's the difference between a sheriff's sale, foreclosure, bank-owned property, or a short sale? We have the answers and we'll tell you about it on today's episode.
Okay, so a short sale basically is when the current owner of the home owes more on the mortgage than they can sell their house for.
I've seen this happen once with one of my clients, and they didn't even really realize that they were in this situation until we were very close to the end of the transaction. And what they had done was they were very kind people, and they had paid for their son's college education by taking second mortgage on their property. And when it came time to settle all the accounts at the end of the transaction, which typically happens with the attorneys and title company in the state of New Jersey, they were very, very close in what they were getting to the property to what they owed, and they actually ended up having to write a check for $2,000 in order to make everything balance out at the end. So they didn't make money on the sale. So that was a near short sale situation. But we have also had clients where it was a true short sale. They again didn't have enough from the proceeds of the sale to cover their mortgage, and so then you have to ask for the bank's forgiveness of part of that loan. So it tends to take a lot longer for a short sale because not only do you have to negotiate your the sale price with the seller, but then the seller has to go to their bank and demonstrate financial need and a reason why they should get part of their loan forgiven. And that's a big deal, as you can imagine. The banks don't just like wiping the slate clean for no reason. They really make them prove their case. There's a lot of paperwork involved.
And with the short sale, there really is no set time frame. So unless you're a flexible buyer, you're waiting not only for that homeowner to accept your offer, you're going to do your inspections. There may not be any money to do any repairs. And then you have to wait for the bank to review their file and your offer and have their appraiser come in. So it's a lot of ifs, and in the perfect world, it will work out, but it could take you several months to even get an answer from the bank. And they can still come back to you and say, you offered X, but we want more money for the sale of the house. So there's a lot of uncertainty. You just got to be comfortable with waiting, and you could reap some good rewards.
A little bit easier and faster of a transaction is when you have a foreclosure or even a sheriff's sale. What a foreclosure means is that the bank has taken ownership of the property because the seller or the homeowner has defaulted on their loan. It's a lengthy process for the bank to get to that point, but once they've listed the house for sale, it's pretty much smooth sailing. One of the categories of foreclosure is called an REO property. You might have heard of that. REO stands for real estate owned, and that means that the bank now physically has the deed, they have the keys, they own the house now, and they're going to be turning around and putting it on the market.
And another thing to consider if you're buying an REO or bank foreclosed property, that home may have been vacant for several years with no heat on. A lot of times they will not put on the utilities for you to do your inspections. A home may not have been winterized in a proper time frame, so you might have some damage to the furnace or the heating pipes that you're not aware of. So really it is a buyer beware kind of situation with some of the foreclosed properties. Sometimes the lenders come in and they make it look like it's a beautiful, just on the market home, freshly painted. They do some repairs, but it varies.
There's a tremendous variation in what you see for those listings. So again, you're going to want somebody experienced to really talk you through what the scenario is for that individual property. The last option is a sheriff's sale, which is really not for the faint of heart at all. That's where you go down to the county courthouse. So a lot of times, we're dealing with Passaic County, Bergen County, Morris County. You actually have to physically go to the auction and bring cash, and you have to pay for it on the spot. You have to be an investor who has enough money to cover the cash like that and to be prepared for basically any property condition that might exist, from cracked pipes to garbage everywhere to hoarders to all of those kind of scary things. Those are usually sheriff sales. Okay, so we hope that you appreciated the tips that we had today. Distressed property is kind of a different thing. Maybe going to be seeing more of them in the next few months, but if you need any more help, feel free to drop a comment below. We can definitely answer any questions that you might have there, or you can find us on our website, which is skylandsrealestate.com.